Hello and welcome to our video about the Morningstar candle. In this video, we will be discussing what the Morningstar candle is, how it works and how you can use it to improve your trading strategy. So let's start with what is a Morningstar candle. The Morningstar candle is a 3 candlestick pattern that occurs in a downtrend. The pattern consists of a long bearish candle followed by a small bullish or bearish candle and then a long bullish candle. The small candle in the middle is known as the star. The Morningstar candle is a bullish reversal pattern, which means that it signals a potential change in the direction of the market. When you see a Morningstar pattern, it indicates that the bears are losing momentum and the bulls are starting to take control. So how does it work? The Morningstar pattern is made up of 3 candles, as we have mentioned. The first candle in the pattern is a long bearish candle that shows that the bears are in control of the market. However, the small candle in the middle of the pattern indicates that the bulls are starting to fight back. The second candle in the pattern can be bullish or bearish, and it's important to note that the color of the candle doesn't matter as much as its size. The second candle should be small, indicating indecision in the market. The third and final candle in the pattern is a long bullish candle, indicating that the bulls have taken control of the market. This candle is usually longer than the first candle in the pattern, indicating a strong bullish move. So how can we use the Morningstar candle in our trading strategy? The Morningstar candle can be a useful tool in your trading strategy, as it can help you identify potential entry and exit points in the market. When you see a Morningstar pattern, it may be a good time to enter a long position, as it indicates that the trend may be reversing. However, it is important to remember that no trading strategy is foolproof, and it's essential to manage your risk appropriately. You should always use stop loss orders and follow proper risk management practices to protect your capital. So let's take a look at an example of how you should use the Morningstar candle in your trading strategy. For example, suppose you are a forex trader and you are looking to enter a long position on the Euro USD currency pair. You have been monitoring the market for a while and noticed that the price has been in downtrend. However, you start to see a Morningstar candle form on the chart. The first candle in the pattern is a long bearish candle followed by a small bullish candle and then a long bullish candle. This pattern indicates that bears are losing momentum and the bulls are starting to take control. As a result, you decide to enter a long position on the currency pair. You set your stop loss at a level that you are comfortable with, and you wait for the trade to play out. As the market moves in your favor, you adjust your stop loss to lock in profit and minimize your risk. Eventually, the market reverses and you exit the trade with a profit. This is just one example of how you could use the Morningstar candle in your trading strategy. So here are some tips for using the Morningstar candle in your trading strategy. Look for confirmation. While the Morningstar pattern can be a strong signal of potential trend reversal, it is important to look for confirmation from other technical indicators. You could use tools like moving averages, Fibonacci retracements, and other candlestick patterns to confirm the signal. Watch for false signals. Not every Morningstar pattern will result in a trend reversal, so it's important to be cautious when using this pattern. Look for other technical indicators. However, it is important to remember that no trading strategy is foolproof, and it's essential to manage your risk appropriately. You should always use stop loss orders and follow proper risk management practices to protect your capital. So in conclusion, the Morningstar candle is a useful tool in your trading arsenal, as it can help you identify potential trend reversal and entry points in the market. However, it is important to use it in conjunction with other technical analysis tools and proper risk management practices to ensure your success in trading. Thank you for watching this video. I hope you found it informative and helpful. If you have any questions or comments, please leave them in the comment section below.